Last Thursday, Congress debated and voted on a bill affecting federal student loans.
The American people deserve the clarity, certainty, and protection the Smarter Solutions for Students Act offers.
Vote no on the Making College More Expensive Act.
This is a topic close to my heart. I have spent nearly the last decade working in the student loan industry. Due to this personal experience working with student loans, I have a unique perspective of the goings-on behind the scenes. And as you may have guessed, I have a pretty strong opinion on the subject.
On July 1st, interest rates on federally subsidized Stafford student loans will double from 3.4% to 6.8%.
We now know in America today, student loan debt is greater than all credit card debt combined. It's an amazing burden that we're passing on to the next generation. We're not giving them opportunity. We are ensuring decades of servitude.
When the Affordable Care Act, also known as Obamacare, was passed, Congress tacked a student loan bill to it, called the Student Aid Fiscal Responsibility Act, or SAFRA. This went into effect on July 1st of 2010. Among other things, this legislation completely overhauled the federal student loan program. Prior to SAFRA, federal student loans were financed by private lending institutions. The loans were regulated and guaranteed by the federal government, but the money was put up by the banking industry. The banks got a pretty good deal because there was a guaranteed return on their investment. The students got a pretty good deal because the loans offered benefits that you just don't get from your average bank loan. There are deferment options, like for unemployment or economic hardship. Based on financial need, the students could also qualify for a subsidy. When a loan was subsidized, the student would not have to pay the interest that accrued on the loan while they were in school or on a qualifying deferment. Uncle Sam paid the interest for them.
As my friends on the other side of the aisle know perfectly well, but never say, more than 70% of all of our students take out both subsidized and unsubsidized loans. And as my friends on the left know perfectly well, but never say, they leave those unsubsidized rates at 6.8%.
I join with millions of students and parents and organizations that represent them in strong opposition to this Making College More Expensive Act that's before us here today.
Mr. Speaker, I rise today in strong support of H.R. 1911, the Smarter Solutions for Students Act.
Mr. Speaker, I rise in strong opposition to the Republicans' Making College More Expensive Act.
I rise in strong opposition to the Republican Making College More Expensive Act.
After this change was implemented, the loan programs basically stayed the same, except for one major difference. The banks no longer provide the funding. The loans are now financed through the United States Treasury. And instead of the banks earning the return, the federal government collects the interest charged. Now, in case you haven't noticed, as of July 1st, 2010, the federal government is in the banking business.
We're here today to address a crisis of Washington's own making. Several years ago, Congress decided politicians, not the free market, were better equipped to set student loan interest rates.
I rise in opposition to this bill. Why? It increases the cost of student debt for millions of Americans just trying to continue their education.
Now, as we watch the political demagoguery playing itself out on Capitol Hill, and when you know the truth, it's plain to see who's playing political football with student loan and who is really interested in doing what is best for our college students and for our country. To hear what the Democrats are saying, you'd think that the federal takeover of the loans back in 2010 was the best thing ever.
I rise in opposition to the Making College More Expensive Act.
Students deserve better. They shouldn't have to watch as Washington holds their interest rates hostage each election year. They shouldn't have to deal with the uncertainty that comes with waiting for politicians to cobble together another temporary fix to keep interest rates in line with the market.
I rise today in opposition to the Making College More Expensive Act.
Truth is that with regard to the benefits offered with the federal student loan program, nothing has changed. What has changed is who puts up the money for the loans. Specifically, it's changed from the banks to the taxpayers. and the loss of the positive side effects to financing in the private sector. See, before, the banks financed the lending and earned the profits, which, believe it or not, is good for the economy. Now, the taxpayer puts up the money for the loans. The profits fall down the governmental hole of never-ending deficits.
Families deserve the security of knowing that the marketplace will be setting their interest rate, not the results of the next mud wrestling match in Congress.
And stop crushing the aspirations of these families and these students, which this legislation does.
Now, when the banks were in the business, they competed with each other. Now, I am, with no apologies, pro-free market capitalism. Competition is good for the consumer. To promote their product, the lenders used to offer additional incentives called borrower benefit programs, or BBPs. BBPs provided rebates for graduation and/or interest rate reductions for on-time payments. A typical BBP would provide for the student borrower something like, say, a 1% principal balance rebate or reduction for actually completing your program of study and graduating. And then they would give an additional 2% off your interest rate after making the first 24 payments on time. With these added incentives, borrowers had an opportunity to save literally tens of thousands of dollars over the life of a student loan. What do you suppose happened to these incentives when the federal government took over the program? Now think back. 2010. How was the economy doing then? What kind of effect do you think it had on the banking industry to suddenly have all this solid, guaranteed lending business pulled out from under, just when we needed it most?
Let's tear down this great wall that the GOP and the House leadership are trying to build around our middle class, and let's not double the rates.
And one more thing about these arguments raging on the floor of the House about all this. They seem to be stuck on this fixed rate versus variable rate loan issue.
Under the current law, student loan interest rates are fixed. However, H.R. 1911 would change that, and student interest rates will become variable rates based on the Treasury interest rate plus additional percentage points.
Some on the other side wish to engage in endless debates on the level of student loan interest rates. This is the wrong debate to be having, however, and distracts us from real reform.
The Dems seem to want to demonize the Republicans for trying to give the borrower a lower percentage on a variable interest rate loan. Okay, now, especially when rates are at an all-time low, and the borrowers have the option to choose when to consolidate their student loans and lock in their current rate, variable rates are an advantage to the consumer.
Mr. Speaker, my colleagues are concerned about the predictability of the market. What about the predictability of Congress?
I know people won't believe this, but we're debating a bill to make it more expensive.
Who's fooling who?
The Republicans have once again decided to do things the wrong way. The Republicans just don't get it. Oppose this rule and the underlying bill.
Mr. Speaker, one of the best things we could do for college students now and in the future is to provide a stronger economy.
What have we learned from the past about which is best for managing business? The private sector or big government?
This debate is about a fundamental question. Who do you trust more? The promises of big government or the private market setting rates in the marketplace?
I think that we should just scrap SAFRA and go back to the way we used to do it. Let's go with what works best.
This has been a Sunfish production.